following is a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media. Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. I'm your host, David Blain. Thank you for joining us today. We're broadcasting on 94.1 FM WNBU as well as cable TV 10 in New Bern. Also, you may be listening on the internet. We welcome you as well, www.dlblain.com, listening to the archives there. A lot of our input for our shows comes from viewers and listeners just like you. So if you have any comments or questions, by all means, pick up the phone and give us a call, 252-633-0107. You can also email us, allthingsmoney@dlblain.com. That's allthingsmoney@dlblain.com. And, of course, you can contact us through our website, once again, which is www.dlblain.com. Okay, we've got that out of the way, so let's get on with the show. We've got some good topics to cover today, all sorts of crazy things. This one, I thought I'd start off with, I'm not sure if it has anything to do with finance or not, but it just caught my eye. This is unbelievable. Second blackout in India in 2 days leaves 670 million without power. For those of you maybe not aware of the fact that the U.S. has about 330 million people, so twice as many people as live in the U.S. were without power in India for the second time in a couple of days. It just says the grids covering a dozen states broke down, the second major blackout in as many days, an embarrassment for the government as it struggles to revive economic growth. I guess that's the hook to finances. India, one of the BRIC countries, Brazil, Russia, India, China, this emerging economy. And the reason I look at this is to highlight the fact that although they have 1.2 billion people, they are one of the emerging economies. If half of your population is without power twice in 2 days, you've got a little ways to go to continue into the developed economy status. Now, it does say that manufacturers and most industries have dedicated power plants or large diesel generators that are shielded from the outage, but anyway, 670 million people. So next time your power goes out, I know here in New Bern, power goes out, and the guys that fix the power lines in New Bern here, they do a great job. They're always right on it. Power never stays out for long. Over the weekend, went out again, and they're out there in the storms and rain and fixing the power, but 670 million people in India. Okay, another interesting little tidbit. I don't really follow the basketball much. I used to like basketball. I used to play basketball. I don't really watch it anymore, but this caught my eye. I guess there's a guy by the name of Jeremy Lin who's become really popular NBA player. If you haven't been following, he played for the New York Knicks, and he was recently traded to the Houston Rockets. And he was famous for this Linsanity that sort of eclipsed the Big Apple there. Anyway, what this has to do with finance is the tax implications. That according to Americans for Tax Reform, Jeremy Lin being traded from the New York Knicks to the Houston Rockets will save him over $1 million a year in local and state taxes. And the author went on to question why more athletes aren't clamoring to play in states like Texas. And it's probably because their advisors aren't thinking about that. They're trying to get him the most lucrative contract, not necessarily looking on an after-tax basis. Of course, we at our firm, everything we do is on an after-tax basis. So we would advise these professional players on an after-tax basis, if you get a better deal in Texas, go play down there. Anyway, that was kind of interesting. Another kind of disturbing thing, we talked a lot about the Facebook stock debacle, how we don't recommend people get in on IPOs, and that they're mostly designed there for the fees it generates for investment bankers as well as the founders cashing out. And hey, I have no problem with the founders cashing out. I think that in Facebook's case, there may have been some, I think it was mostly on the investment bank side, withholding information. You know, they should not withhold information from the investors, but the stock market, IPOs especially, it's, you know, it's buyer beware. And if a company offers its stock and they're forthcoming about the financials and the prospects of the future and people buy it, you know, I have no problem with that. But this is another company. I don't know if you've heard of Zynga, but Zynga is a business that they develop video games mostly for Facebook. I think I read someplace that something like 90% of the revenue comes from Facebook. Anyway, Zynga did an IPO back in, I think it was in December, that they did an IPO to the public that at $9 or $10 a share. Well, they did in April. They did a secondary stock offering where insiders liquidated another 43 million shares of stock at $12 a share. So they IPO'd in December, went up to 12. Insiders did another secondary offering where they got 516 million. Now, this secondary offering, the money went straight to the founders. It didn't go to the company. It didn't go to the company to expand, you know, employees or anything like that. It went right to the founders. Once again, I don't have a problem with that. If you are, excuse me if this is a little too harsh, if you are dumb enough to buy a stock in Zynga at $12 a share and that money went right to the founder, well, that's your fault. But the point is, whenever you're seeing these new companies coming out, IPOs, things like that, just stay away. The corollary to this story is just a couple of days ago, Zynga stock, they announced their earnings. Horrible quarter. The stock went to $3 a share. Now, the insiders cashed out at just the right time, and whether they did anything wrong or not, I'm not here to judge them whether it was wrong or insider information. The point is that they sold out their inside shares just in time. There's no way you as the individual investor can compete with that. Even if there was no malfeasance on their part, they just, from working in their job, have a better idea of where the company is going. Even if they're not withholding any information, they just have a better idea of where they're going. And the other thing is, this was just a fraction of the shares. I mean, these guys own millions and millions of more shares, so they got hammered along with everybody else. But my point is that if you're the investor out there and something like Zynga catches your eye, you know, just give it a second thought, get a second opinion, call me, we'll let you know what we think. But these things, the Facebook, Zynga, things like that, it's just a good way to lose a lot of money unless you really know what you're doing. All right, well, that brings us to our first break. When we come back, we're going to talk a little bit about unemployment and some of the jobs that are available that are not getting filled. So for All Things Money, I'm your host, David Blain. We'll be right back after a few short messages.